welcome to the first of our fireside chats. So this is a slightly different format where, as you can see, we're in a more intimate space if you're here in person. And these are kind of more informal conversations to get a bit deeper into some really interesting topics. So this first fireside chat is on steward ownership and purposeful investment with the lovely Maike and Emma, and I am going to say no more and let them introduce themselves, and I will pop up back later for questions.
Thank you. Welcome everyone. I'm Emma Shaw. I'm working with the JRF Emerging Futures team in the Reimagining Wealth and Investment track. And I'm in conversation with Maike Kauffmann from the Purpose Foundation. We're going to do much more personal introductions in the first part of our conversation. But just to give you a feel for this session, it's all about steward ownership and purposeful investment, and in particular looking at steward ownership as a disruptive, innovative way of reimagining the role of business that's really picking up pace around the world. We're very interested in why that is. And the reason we think it's very interesting for wealth and shifting wealth is because it gets into the really deep design and the nuts and bolts of companies and investment structures, in particular pulling apart wealth and power. And it's interesting because it's kind of a real example that's already being used, albeit in a relative niche perhaps at the moment. We're going to just lift the lid on that and get stuck in. We will talk for about half an hour, and then if all the questions and ideas that come to mind, channel them through SpotMe, their platform, and then we'll have about 20 minutes in the second half to field and respond to as many of those as possible. I think let's start with our personal connection to steward ownership.
Cool.
And why we're here.
Awesome. Thanks, Emma. Thanks also to JF for me being here. My name is Maike. I'm co-lead of the nonprofit work of the Purpose Foundation. I'll go into a lot of details around the Purpose Foundation later on. But maybe first, kind of my personal connection to the topic of steward ownership. It's actually really a personal connection, and it started when I was still a child, because my mother is a founder, and she founded the company when she was younger than I am now, and built it up to it becoming a medium-sized company in Germany, a publishing company. And when I was maybe 11 or 12, her co-founder decided that he wanted to leave the company, and he had a bit more than 50% of the shares, so majority of the shares, and basically said, well, I can sell the shares now, and I can kind of then build up something with the value of the company, but to me that doesn't feel right, and it doesn't feel like the type of company we've been building for the past 20 years. So what should we do? And they actually worked for quite a long time. They worked on finding the right structure for their ownership level to ensure that really what they built, the purpose they wanted to kind of work on with the company would remain in focus, and that the control over the company wouldn't be kind of automatically sold to someone or automatically inherited by me or my brother, but it would actually stay with the people that actively take on responsibility in the company. So they designed a steward-owned company with a foundation ownership structure in really early for kind of this whole ecosystem. And for me, that was always the normality. Like, that was the normal type of company. I worked in it. I kind of knew my mom in there. I knew the employees in the company, and it was normality. And then I went on to study business administration and business studies, and I was like, where is this like normality that I've seen so many times in real life? It's not represented at all. And we talked about cost cutting and offshoring and shareholder value and management, and I was like, but that's not what we actually see in a lot of parts of our entrepreneurial world at the moment. So I branched out a bit, did a few things differently, and after my master's was lucky enough to be able to join the Purpose Foundation to work on steward ownership becoming just as normal as the other forms we talk about. How about you, Emma?
So my my closest connection to Steward Ownership is through a company called Library of Things, which I co-founded 10 years ago, which had a pretty normal first 4 years of any social enterprise. We did what most people do, which is structure ourselves as a non-profit company and look for all the charitable grants that we could find. And we're all volunteer run and completely grant dependent and completely bootstrapped. And after 4 years of that, the mission of the company is about providing a affordable, desirable alternative to wasteful consumerism, so you can rent and borrow all the things you need from local spaces and connect with your neighbors and by accident almost have a zero waste lifestyle. But that big mission and the kind of big plan to disrupt Amazon wasn't happening with our tiny budgets, so we needed to raise some investment. But being a social enterprise, and we will talk about, like, Steward Ownership is not just for social enterprises by any means. It's a really useful model. We went through a quite significant restructure of the company into Steward Ownership, although it really wasn't something we knew about at the time, actually. It was coming from first principles. How do we bring in investment to a company with a really strong soul, and how do we not sell that soul to the devil, well, not to the devil, but like to this kind of remote VC investor audience, or like that wasn't a world we'd been in. Mm-hmm. And so what we landed on was, what we have now learned was a Steward Ownership model, which is about having investors with the appropriate level of control and voting, and a mission lock in the form of a guardian shareholder, and an investment instrument that was compatible with that, which was all about providing a fair return. And then went about raising money for the next 5 years with that structure. And I guess learned the hard way that was really, really hard. And it took a good few years of trying to get underneath, why is this so difficult, to realize it's not us being bad entrepreneurs or being bad at pitching. It is actually really going against the grain of the norm, and actually, whether it's the mindset of individuals, high net worth, angel investors, like the kind of psychology of investment, or it's the legal, technical barriers around funds not able to sign up to these kind of structures, that we realize, like, okay, there's something more fundamental going on here, and actually in a way you're rewriting and hacking the law when you create some of these structures. So that led me a year ago to step away from the day-to-day of Library of Things into the other side of the funding world, and thinking about and actually trying to actively move money into alternative structures that can prioritize a social purpose and talk about what's enough and what's fair, and we're going to get into all of this way more. And so the work with JRF, and the reason it's so, I guess it's like getting into the real deep good stuff about moving wealth, is it really challenges this, what is wealth, who benefits from a company. It challenges, like, who has a say, and who holds power, and what does that look like, and what does the succession of company ownership look like. And we're kind of doing this in the context of what is being called the great wealth transfer, so an anticipated trend that we're already seeing the start of, where around $70 trillion is expected to change hands from the kind of post-World War II generation to the next generation, who are inheriting that money, who have a whole different set of values, and who are maybe more deeply concerned about, like, certain, like, issues they're close to in the world that they care about, or they're thinking about their future and who is the next generation. And so, here we are. We should now start. I think we should get into what is Steward Ownership, because that's our personal connection, and you might be like, what is going on here? And then we'll talk about what that means for investment. Mm-hmm. So would you mind kicking us off with the kind of key principles of Steward Ownership?
Sure. I think you already said quite a lot of things that kind of connected to the meta level of why we are all here, like going to the root of companies and the underlying structures really of our economy. And really, Steward Ownership is a principle that we sometimes call it a historic innovation, because it's founded in those principles of kind of concepts of around ownership that are grounded in entrepreneurial activities that of the past 200, 300 years, but also in a lot of indigenous concepts of ownership. And I will just start with kind of the definition of steward ownership, and then say a bit more, I think, about the historic concept. But steward ownership is an alternative ownership structure for companies that enshrines two principles in the DNA, the root of the company. The first principle is the principle of purpose orientation, and that means that the value created in the company and the profits that are made, they are not there for the shareholders of the company, but they're there to serve the purpose of the company in the long run. So profits in that sense and creating shareholder value is not a goal in itself. It's not the goal of the company, but it's like profits are means to the end, means to the purpose of the company. And the second principle is the principle of self-determination, and that means that the last instance of power, the control over the company, always remains with people that are actively taking on responsibility in the company, that know what's going on, that are accountable for kind of the company and its strategy and the outcomes of that strategy. So control isn't sold or like speculatively sold or automatically inherited by anyone, but it always is passed on from stewards to stewards, and we hear the word steward and stewardship here quite a lot. And I mean, that's how steward ownership really comes to its word. It's not ownership as asset ownership or like asset ownership of a company anymore, but it's ownership really as stewardship. And those two principles, like every company can say we want to live them and we want to follow them on our day-to-day life, and that's really great. But what steward-owned companies do specifically is that they in some way enshrine these principles in the long run, often legally, sometimes through social locks, but these principles, they really are passed on over generations and generations. Maybe as a start.
And can you give us are there any household names?
Yes.
What does it look like from a global point of view? Like, where are you seeing this model growing more?
So really, like older household names are companies like Bosch, companies like Novo Nordisk or Carlsberg in Denmark. A lot of the large European kind of foundation-owned companies, Victorinox as well in Switzerland. John Lewis Partnership is one of the most famous examples here in the UK. But then I guess the most popular, newest example is the company Patagonia, and what Yvon Chouinard did with the company 2 years ago now, I think, passing it on to Perpetual Purpose Trust and non-profit. And I mean, those are all really large companies, but we also see it emerging in startups all over the world. It's kind of, it's taken, the old concept is taken again in really new contexts. So maybe some of you are familiar with the search engine Ecosia that plants trees. Ecosia is a steward-owned company for 5 years, I think now. So also quite long already. And yeah, we see, again, in Library of Things, more and more startups that don't want to make an exit. They're not there to build up the next unicorn, but they're to solve problems for society, for their customers, for the planet, and they want to build up long-term oriented companies that might not be at one point the biggest companies in the world, but might at one point be a really stable, good-running, mid-sized company, large-ish company, and those types of companies are looking more and more to steward ownership.
And can you give us a flavour of in other countries and in other contexts?
Yeah.
Where you're seeing the most kind of activity?
Yeah, we really see steward ownership emerging all around the globe. We do have some kind of hotspots, I'd say. I mean, particularly in regions where steward ownership just has a longer tradition. So in Northern Europe, we see a lot, but currently in the Netherlands, there's a whole movement popping up as well. We see a lot of particularly mid-sized kind of family businesses in the US going into steward ownership as a succession solution. We see a whole movement in South America, particularly based, as I said earlier, in kind of the indigenous concepts of ownership. And then there are just a few kind of interesting places where it's popping up, where, like, for example, there's this really cool movement currently in Uganda where they are basically building up an accelerator in sustainable food, Rutical, that is also based on steward ownership, because they just say for Ugandan entrepreneurial culture, it's just a really good fit. Or I think, Emma, what we talked about is we're currently getting a lot of interest in this concept from Japan, and it works really well there because they, I don't know if you know, but some of the oldest companies in the world, kind of oldest family-owned business or kind of businesses that have been continuously running in the world are based in Japan, because they have this tradition of adopting successors. So basically they are not going through family to find the people that can take over the company, but they actually adopt the people that seem the most able and most kind of value aligned to take over the company. So it's on the self-determination part, they really are already trying to kind of get people in, not because they have the most money or because they're automatic family members. Yeah, so a lot of different interesting concepts, definitely.
I think what I find really interesting about it is I started my career as a biologist in kind of ecosystem science, and there is a phenomenon when things independently evolve in multiple places, then you kind of know they're onto something. Like it's a good design to a shared challenge, and if we're seeing that increasingly emerging in these different contexts, I think what it makes me think of is we're so, especially in a startup space, and maybe that's the shift that we're seeing, is this isn't necessarily about just the long-standing bigger companies looking for their successors, but this is about founders and entrepreneurs from the very beginning wanting to like set that purpose very clearly, especially where they're going to have to raise capital to get themselves off the ground. And I think that's what made it, in a UK context, I think that's still incredibly nascent. And what that means is like the Silicon Valley kind of venture capital story that we're all told about how you start a business, which might be bootstrap it and then a friends and family round. Well, what if you have friends and family who can like finance the start of your business, and then you're meeting angel investors. If we're used to this, like you're going to be the next unicorn, you're going to be the next Uber, that really skews the kind of entrepreneurial solutions that we're able to resource, and especially where those are companies that have a very different value set, maybe that aren't just seeking a purely financial return, but are interested in wealth building across kind of like community and environmental wealth building too. There is a gap currently, I think, with where investor mindset is and where entrepreneurial energy is. And something that I really care about is, on one side, having experienced this from an entrepreneur's point of view, and now being spending more time with those kind of holding and stewarding capital, is often those holding and stewarding capital are saying that's all well and good, we're ready to shift our portfolio, our endowment, but there is no pipeline yet. Like we're like a sense of we've done the work, we're ready, but show me the pipeline. And it's like, well, that is happening in parallel, in tandem, but we're not meeting. And so I'm kind of interested in how the field is going to now move, and this is I guess the message that we want to bring across is like, this is a model that is so ready to go. It's like ready for market, with the right approach to investment. Yeah,
and I mean, we talked a lot about the entrepreneurial side being ready for this and kind of starting up, but also the investor side, at least some investors and more, I think, are really ready for this. When Purpose Foundation started, this was so niche. Like, there wasn't a name for steward ownership. There wasn't a definition for steward ownership. No one knew about this, and there were a few kind of lighthouse companies doing that, and no one would ever think about investing in it. There were like maybe one or two people that were open to doing new things. And then now we really see that for a lot of investors are also thinking about, well, how can we move our money in a way that actually serves people and planet, and how can we move towards more intentional forms of investing that are not building up monocultures, but actually leading to a permaculture of different forms of entrepreneurship, different forms of companies. So both in the impact investing field, we see more and more people also thinking about moving beyond the kind of traditional vehicles that and instruments that we know from venture capital and private equity. A lot of business angels, particularly ones that have either inherited the money or maybe actually made their money in an exit themselves and realized what that did for the the company and themselves, really open to steward ownership and aligned financing. And maybe that's where we should kind of talk very briefly about kind of what does it mean to invest in a steward-owned company, because often when we talk about steward ownership and the principles, people are then like, but then you can't make any money anymore as an investor, and so it's totally blocked off. But that's not the case. Obviously, steward-owned companies need money, and investors that invest in steward-owned companies, I mean, they can do it as grants, but obviously they can also do it as investments that have the potential for return. So really, steward ownership aligned financing is different from conventional financing on 3 levels. And one is the level of return. So when we talk about return in the conventional VC and PE world, we actually talk about unlimited returns, because there's a potential unlimited upside. At some point, I'll sell the company, and it could be 100x, and it could be 150, and there's no limits to what I could theoretically get. And in steward-owned companies, actually, if you invest in them, you have in some way you have a limit. You ask, how much is enough for me as an investor? How much is adequate for the risk I'm taking as an investor? But also how much is adequate for kind of the company to be able to pay back at some point? And that brings me to the second point where it's different, liquidity. So usually liquidity for investors comes from kind of an exit at some point, so the sale of the company, or at least the parts of the shares. And in steward ownership aligned financing, actually the liquidity for investors at some point comes out of the cash that the company generates, so out of the real value on the market that the company generates itself. So we work a lot with redeemable equity, with kind of debt-based equity-like financing, where the company slowly but surely repays the investment plus the upside for the investors. And third, governance. Steward ownership means self-determination. So that means that investors don't automatically take over because they gave money, take over power over the company. That does not mean they can't have anything to do with the company and are like completely outside and don't have any say. There are a lot of kind of gray tones of how they can be involved, but it's still the entrepreneurial power and kind of steering wheel remains with the entrepreneurs who build up the company and steer that in the future, and investing doesn't automatically give you entrepreneurial power. So just to kind of get us there.
Yeah, maybe we should get into some of the detail around, you named a few like investment instruments, but how does that look, particularly in a German context? Like if you're, and maybe actually, because Purpose Foundation has got many sides to it, so that might help first, and then if we can talk about the instruments we see in a UK and a German context.
Okay. And then also I think we should probably move on to questions in a sec, but I'll start first with the Purpose Foundation, because I do think that it gives a really good overview of kind of where steward ownership currently is, because we started off with really the question of, well, why isn't this model known if so many companies are doing it? Like, why is no one else doing it? Why aren't we talking about this in business schools, etc.? And really came to 3 main hurdles for steward ownership today. The first hurdle is the hurdle of narratives and information. So when we talk about, steward ownership, a lot of people don't know what it is first. But also when we talk about entrepreneurship and what is success and so on, we have completely different narratives than a bit more plural approach. Like you mentioned, the treadmill of kind of going this path, and then you suddenly are a completely VC-backed company, and you don't even quite know how you got there, because you never really talked about ownership and what kind of company you want to build. So if this first hurdle of kind of lowering the information gap for entrepreneurs, but also for everyone else to be able to understand what steward ownership is and embed it in your work. Then we are still at a phase where steward ownership is not the easiest to implement legally, and that has already changed quite a lot. So in the last years, we've been managing to make the legal structures for steward ownership less complicated in a lot of different countries around the world. But it's still not as easy as forming a limited liability company or something similar. So you still need to kind of do a few hacks in the legal system. And thirdly, capital. And kind of finding aligned capital. And we've actually built all our activities around these 3 hurdles. So we do nonprofit work where we can really inspire and enable entrepreneurs, investors, lawyers, everyone who wants to build in the model of steward ownership into their work to know about it, to bring it into the world further. So we talk at events like this. We write books, case studies, etc., etc. But then we also have a consultancy that consults companies in their transition to an aligned ownership structure for them, mostly into steward ownership. And then for a long while we said, oh, you can finance that if people were asking us. Of course there are investors who will do that, and at some point realized maybe we should give a few examples of how it can be done. So we actually built up 2 investment funds, one investing in startups and the other in medium-sized businesses, and exclusively investing in steward-owned businesses and exclusively investing in the way I just described. And all the things we learn in the market-based activities, so consultancy and investment, are all funneled back into the nonprofit and are made public. So we kind of learn from what we do ourselves on the market.
Yeah, amazing. Is it time for questions?
Yes.
Okay. We can cover the other bits of the questions.
Yeah.
Okay, and keep, it's gone upside down. Keep submitting questions as we go as well. So, first question is quite long, so bear with me while I read it. It's from Leonardo Letelier, and Leonardo, I'm sorry if I'm pronouncing your name wrong, who is has an organisation called Citawi in Brazil. So steward ownership naturally connects to the equity side of the funding equation. There is also a non-extractive way around debt financing. Citawi in Brazil has developed empathetic capital approach that sparks to that. In your personal experience, how have those two, equity and debt, connect?
Great. That's the kind of, we wanted to get onto the instrument. So, I guess so. I can only really speak to this from the experience with Library of Things, and we're in a UK context, and actually equity investment for startups is pretty much the predominant the capital that's available. Except for some kind of socially motivated debt finance through, say, trusts and foundations, like JRF. So on the equity side, what it means is that we can sell equity in the company without giving away power in proportion. So the investment shares are non-voting. There's a separate investment agreement that lays out what investors have a say over or not, because we still want them involved and we want that dialogue and consent for big, especially financial decisions. But I guess the crux of our equity instrument was this idea of fairness. So what is a fair return for an investor taking risk at different stages of the company? And what's fair for one investor is not the same as what's fair for another. And so what it does is it builds in a principle of dialogue from the very beginning, what return are you expecting here? Is it 2x? Is it 10x? Is it 20x? Here's the financial plan. Here's the routes available for liquidity or not. And ultimately, in our case, it was about, the reason it comes down to fairness is because if the purpose of the company is its mission, it's not to kind of default to, the purpose is to maximize and grow the financial value of the company that's then going to be distributed to shareholders. It's the mission, and so what do you do about the finances then? Because you have to still have an answer for that. So it enables the stewards of the company to be empowered to choose return scenarios, exit scenarios, liquidity events that will promote and maximize the mission and provide the financial return. That concept of fairness is just not really available in any term sheets, actually. It means you've got to write your own. It means that tax incentive schemes we have for equity investment are borderline, because it doesn't have the kind of the narrative we resort to around, I guess, a more VC approach to equity finance.
Yeah, maybe going to debt, because we do also see in the startup world more and more equity-like debt-based financing also emerging in the steward ownership concept. So I wouldn't, at least in Germany and in a lot of the investments that we make, I wouldn't say it's only equity. It's also equity, But equity is, as you described, I don't have to go into that. But we, for example, we work with silent participations, we work with subordinated loans, and a lot of kind of revenue-based financing instruments as well, all over the place. And really, it's like going beyond this. There's equity and there's debt, and looking at what's in between, kind of what are the mezzanine financing instruments we see, and how can we structure them in a way that's really fitting the investment relationship you want to build, and the company's needs and the investors' needs, and looking at all these three things. And I think one thing that Steward Ownership and kind of the investment rounds and the enable that you also already mentioned a bit is the relationship that you need to build to even have these conversations of what is enough, and how should we structure the relationship, and what kind of roles should the investors have. And it's a bit less automatic, which also poses some problems because it's less quick maybe, at least at this point in time, but it's also way more adapted to what you want to build.
Yeah, you both talk about dialogue and relationships, and I think I predict that may be a theme kind of coming out today, like the new types of thoughtful, meaningful relationships that we need to build. So I've got a couple more questions. Again, on sort of legal structures from Dr. Alex Boyd. Is there anything you'd want to add around legal structures for steward ownership? And there's a specific bit to this. Is this just for Article 8 impact investment, or is it also for angel/VC investment?
It's for all different kinds of investments. We see a lot of business angels going into steward ownership, aligned financing. We actually receive more and more interest also from larger non-impact investment funds that are wanting to move parts of the portfolio or all of the portfolio into steward ownership, basically asking us, so how can we do that? Like, what do we have to change within our fund structure and regulations to be able to do that? So we see a lot about that. And I mean, was the question only on legal structures around investments? Because I think there's one
for steward ownership.
For steward ownership, because I think one thing that's quite interesting is that we have those principles, and I think they're quite clear and kind of communicated. But the legal structures we see around the world, they're extremely different from each other. We have the perpetual purpose models in the US. We have foundation ownership structures in large parts of Europe. We do have some cooperatives that go really closely, if they have an asset lock towards steward ownership, is doing this currently in several European countries, initiatives for forming a new legal form for steward ownership. One is in Germany, that's quite far advanced. Another one in the Netherlands. Portugal is thinking about this. So there's quite a lot of stuff moving also on the legal infrastructure side of things.
I don't have anything to add.
There's more coming in. So Ned Whitehead has asked, have you seen examples of small to medium companies that are already private equity owned, freeing themselves from the fund life cycle and moving to steward ownership?
Do you know one?
I don't know a private. No, go for it.
Sorry, Emma. Yes, we've seen that. It's actually, there's a really amazing company, which probably no one who isn't in Germany knows. It's called Haferkarte, and it's bringing organic food to train stations and kind of all places where people just kind of walk and want to grab something healthy and good. And they had investors in there already, and they actually are now doing this huge campaign around both crowdfunding and taking on more aligned investment to move the company into steward ownership. And we've seen that in a few cases. There's another one that's a toy company. But you will need to have the investors that also are willing to be bought out and then move that path with you. And there might be scenarios, and we've seen those types of scenarios where the company was already too far kind of away from being self-owned, in that sense that they weren't able to pay the price of buying out the investors without putting the company into insolvency anymore. So kind of there is a path of no return, I guess, of taking on too much private equity or venture capital. But we definitely seen success cases as well.
I think that's why on the earlier stage side, so in terms of where a company is just getting started in the first few years, where it would be more aligned with VC or angel investment, if it's selling equity, that awareness of either maybe an entrepreneur's done the first round of finance and got so far and realized that I'm moving somewhat away from actually how I imagined my company being. I want to do something about that. I mean, I've heard quite a few founders becoming aware of this model at that stage, and it is more difficult, but it's still possible. Like, as you said, if you have the means to buy them out, change the terms, bring them with you. But there is something about also the maturity or the readiness of a company to take this model, which is so important, because I don't think it's something that I personally don't advocate for. I'm an advocate, but I don't say to every founder wanting to do this, like, absolutely, because my friend Esme here will talk about the road to nowhere. Like, at the moment, the capital is not there in the way it needs to be, and so it's not like you're choosing a path that is right for you in the company. It doesn't mean there's a ready supply of cash ready to finance you on the terms that you need. And so I think that's where we need both kind of sides of the table to come together, because this is a model that entrepreneurs, like, is in service of the companies that are being built, that entrepreneurs are looking for, but they're going to be taking quite a significant risk if they're doing it from the very beginning. But the longer they leave it, the more difficult it gets. So we have this, like, little bit of a chicken and egg challenge.
And sorry, one more thing to add to that, I think, is if you at any point feel like steward ownership is constricting you and is kind of blocking you from the way where you want to go, I don't think it's a model that you should then at that point in time choose. It could still be a model that you think about, but I mean, the entrepreneurs that we see moving into steward ownership, for them it's the only path, and they wouldn't want to take on the capital, like, kind of the type of capital that they are blocking to take on with steward ownership. I think that's quite an important distinction if you talk about when to move into steward ownership. But I think the discussions around, what kind of company should we build up, and where do we see it, and do we want to make an exit, and how much is enough, and who should have power and why, those conversations should be done as early as possible, like in the founding journey of the company.
We have a question from Tom Beresford, actually, that kind of slightly speaks to the, like, is the world ready for me to make the decision that I need to make in the time that I want to make it? So, bear with me, it's another long one to read. The steward-owned economy is dwarfed by shareholder capitalism. How might purpose-driven financiers better support, through their investment strategy, a growing ecology of steward ownership in the UK and beyond as part of a wider strategy for the economic shift we need?
I'm reminded of talking to the legal, so I think there's something about due diligence where there's more room for interpretation when a company is raising money and the legal team is reviewing the founding documents, the constitution, and the investment instrument that's being proposed. Because the one thing, so if you're purpose orientated and that's legally locked in, which is what we're talking about with steward ownership, then you are not serving your shareholders as the primary beneficiaries. You're serving your purpose, and your investors are part of that, your stakeholder group, but you're not existing to serve just them. You've got your community, you've got the planet, you've got your employees, you've got these other stakeholders who have a vested interest. And so when you actually get that written in the legal documents, it will just raise quite a lot of red flags. And one of them would be, for example, around, like, drag and tag. So in, like, an exit event, this is in an investment agreement, if the majority of shareholders in a normal company would vote to sell the company, everyone else who might not will get dragged along in the sale. And so in the case of steward ownership, you have a mechanism to block that, but that will just not pass at the legal table. In a fund, so in a fund where they have got a commitment to the investors who invested in their fund, and they say, we're going to maximize your money, it's just de facto. They haven't even necessarily had that conversation. You're an investor, we have a fund, we'll maximize your money, we invest here. So if they are to invest in a steward-owned company with a legally locked purpose orientation, they would be breaking their contract with the investors of the fund. And so change that, like, capital flows. I don't know, like, that would be pretty easy.
And communicate that you're open to investing in steward-owned companies, because steward-owned companies are, like, they're looking for investors, they're looking for money, and they don't find the investors that are like, potentially I might experiment with it. So kind of be open, and then you don't, just experiment with it. There are quite a lot of examples of how it's being done, but it's still something that you can kind of find your own way of doing it as well together with the companies.
Just one final point on that. I met an investment organization through Purpose Foundation called Fair Capital Partners, and I love this movement because it's like the kind of silent revolution. Like the people are doing this. There's a whole fund, and they just told their LPs, we'll provide a fair return. And then that immediately opens up who they can invest in. So they can invest in Steward Ownership. So I think it's just about that conversation with everyone in the ecosystem to get them to sign up to the same principles.
Absolutely. I'm really, so we've got 3 more questions and 2 more minutes. So and there was a question we're hoping to put to all of the speakers today about what gives you hope. And so I would like to ask you both that to close, and apologies to the 3 people whose questions we haven't got to ask.
You want to start? I should have? Okay.
You start.
I think this whole conference gives me a lot of hope. I really enjoyed the small part of this morning already that I could listen to. And it gives me hope that there's so many people that I see that are moving towards kind of being open for new models, new approaches, that are actively looking for them. And it gives me hope. I mean, we just talked about the investor side and how little capital there is, but it gives me hope. But kind of movement I've seen in the 5 years that I've been with Purpose and within this ecosystem now, and also the amazing entrepreneurs that are putting themselves out there and are brave enough to take these steps, and the amazing investors that are brave enough to take these steps, because they create the examples and the data points that then other investors, other entrepreneurs can look to kind of build up on them.
Yeah, I think in the context of Steward Ownership, like that the fact that there is a model that exists that is being used, that people are interested in, I think it's a very like human way of doing business and investment, and I think people are ready for that. So I think it's not like we've got to start from scratch. Like there's already something that's being used. It's just organically growing in all these different contexts around the world, and there are legal structures, there are term sheets, there is like the instrument is there. I think it's then about kind of building awareness and adoption of that, and like just crossing off the little red flags that are currently getting in the way.
Amazing. Thank you both. I hope you found that useful and interesting. I'm sure it has raised loads of questions. Please keep chatting on the platform, and you guys are around all day, I think, so kind of look out. And you have got now 10 minutes to work out where you want to be next if you want to move and find your next spot. So thank you.